get started. Okay, so today what I'm gonna do, I'm gonna go over basics of day trading. I know a lot of you guys, what am I gonna say, have asked me, how do you day trade or how do you trade or how does this works and how do you make money, all that good stuff. Now I did teach how to swing trade, basics of swing trading a couple weeks ago. Now, as a reminder, it's different. Swing trading, day trading, it's a whole different game. Again, swing trading, you're buying and holding for a couple days, even weeks, even months. Day trading, you're literally buying and selling or shorting or selling, aka selling and buying the same day during the intraday. That's what they call it, the intraday. Intraday, same thing as the same day, buying and sell on the same day. So the most important thing when it comes down to day trading is you need two things. You need a range, a big range, so you could get in and get out. Because being that it's a day trade, you're not going to be able to make money if the stock is not moving. Especially if it's literally not moving or trending or anything like that. So you need a big range and you need liquidity. The reason why you need liquidity is so you can get in and out. There's a lot of stocks out there. A lot of these penny stocks, they literally have no liquidity. Yeah, they go up 10,000% or 1,000%, et cetera, but they have no liquidity, so you can't really go in and out whenever you want. And if you do go in and if you want to get out, you might actually lose money just in the bid-ask spread, meaning the buyer and the seller are really spread apart. They may be 10 cents, 20 cents, 30 cents, $1 apart. So if you buy at, let's say, 150, but you want to sell, you may have to sell at 50 cents, something like that. So you actually lost $1 already right away because the spread is so big. There's not enough liquidity, and again, that's not good for traders. Traders need liquidity, volume, and they need a range so they can make money off. So because of that, the majority of the trades, day trades that I make, and other day traders is based on news or like an earnings announcement or a PR news announcement that makes a stock move. My favorite ones are actually earnings. During earnings seasons, the companies report their earnings and it makes the stock move really quickly and gap up and have big ranges with a lot of volume. So I love to play those type of charts, those type of trades because again they bring me a lot of liquidity and they bring me a big range so I could trade on. So I could again buy highs and sell, buy low, sell high, or short high and buy low. So I'm actually going to go over a trade that I actually made today that I made money on, and kind of just explain to you what I did. Now this is actually a stock that I shorted, but actually I wasn't biased in terms of going long, meaning buying, or shorting, meaning selling. Taking a negative position on it or take a betting against the company. So short sellers, aka bet against companies because they believe the price is going to go down. So I'm going to explain that how I did it. So here you can see KR Kroger literally had a huge today had an earnings announcement. So you guys could see a gap up and it was a huge range. So the range on this day was $2.70. So in that range, in those $2.70, my goal is to look for a place for me to get in to make money on those $2.17 range. So that's what I'm looking for. Now there was a lot of volume. As you can see the volume bar at the bottom. Today there was 64 million shares traded. So that's a lot of volume. Like I said, traders need liquidity because you want to get in and get out. The more liquidity, the better. Because especially for traders who trade big size, if they want to get in with a couple $100,000, get in, get out the same day, no problem. So that's the reason why traders like liquidity. So let's look at this chart now. As you guys can see, what really got my attention to this chart is because of the possibilities of what I could do with this type of chart. If you guys could see the last, let's see, I'm looking right now at the last 6 months, 6-month daily chart. If you go back in time, here last time I reported here on June 15, there was literally a huge gap down, huge sell-offs. And it actually created gaps. You guys can see gaps right here. That means literally price the day before literally gapped, and on the day before it was literally down like, I don't know, I probably could say more than 10%, probably 15-20% on this day, and actually started to sell even further. And then there was another gap down the following day. So it created two gaps. And usually what happens when there's gaps in charts, they tend to fill. And that's what I look at. They tend to fill, and also resistance levels right here tend to also hit. So when today there was a huge gap up on Kroger and KR, it literally gapped up to resistance, and it was holding around that area. So there was two possibilities. It was a possibility that this level, 27.22 level, was going to hold, and it was going to fill this gap. So it was going to go from 222 to 27.22 to 29.77. That could have happened, or that this resistance level was going to hold and fade, and actually happen to happen. That's exactly what happened. So sometimes, depending on the chart, you have to have a no bias. So I didn't have a bias in this one. I wanted the intraday chart, the price action, to tell me what exactly was going to happen. And again, the other thing about being a day trader is you need to understand price action. You need to know how to read it, understand it, so you can make a bias decision, so you can make a trade decision. So let's look at the intraday chart so you guys can see what taught me, what showed me, what indicators gave me that I needed to go short and not buy, because I wasn't biased. I was literally thinking of doing either or. I just was waiting for the chart to tell me what to do. I was waiting for the price action to tell me what to do. So that's what I'm going to cover. Now, this type of trade is actually what I call a mid-morning trade. So this is the type of trade that I only make during the mid-morning. I do not make it at the open. Now, I'm actually going to cover an open trade that I made yesterday, actually 2 days ago, that I want to discuss. Now, that was a trade that I made literally at the open, at the market open, and literally it was seconds, that I made this trade. But this type of trade, because there's a decision factor of where the stock could move, I did not make a decision right away. And as you can see, a lot of traders did not make a decision right away. We have to kind of see where the chart, what the price action tells you, to kind of make a decision of whether to be short, meaning you're betting against a stock, or long if you're betting that the stock could go up. So if you guys can see, today I reported earnings, huge volume pre-market. Now that's another thing about being a day trader. You have to understand the pre-market. A lot of people don't know this. I actually didn't even know that when I first started trading, that there was even a pre-market. So the market in general opens at 8:30 a.m. Central, and it closes at 3 p.m. Central. But it actually opens even before that during pre-market, and I believe it's around 6:30 a.m. Actually, if you guys can see that, actually open at 5:54. Let me see. Yeah, like 5 a.m. in the morning, 5:30 in the morning, literally around there. So, usually some brokers don't let you trade pre-market until like, I believe 6:30 a.m. Central Time. So you guys can see that's where the majority of volume came. So, again, pre-market usually is from 6:30 a.m. to 8:30 a.m. So that kind of gives you right there like at least an hour and a half, or 6:30. Yeah, actually 2 hours to kind of make a decision if you want to trade the pre-market. Now, there are some traders that specialize trading pre-market, and they're really good at. That's not my specialty. I like to wait until the market opens, because for me it gives more liquidity, and you get a better sense of where the market is going. So if you guys can see, when KR opened, Kroger announces earnings. It looks like it beat earnings by actually 3 cents. If you guys could see that at the bottom, earnings per share was actually estimated at 0.41, and it was actually 0.44. So as you guys see, investors and traders love that. So that's why you saw this huge spike pre-market, and then you see this gap up, and that's where those gap ups come from. Now, they don't show it on the chart because it's during the pre-market that move happens. So that's why you don't see that in the chart. That's why you see these gap ups like right here and right here, because it happened. That move happens during the pre-market. Now, for some traders who are really good at trading pre-market, they actually make money in those type of moves. Now again, that's not what I specialize in. That's not my style. I usually like to trade when the market opens. So, all right. So when the market opened, I'm gonna get rid of the pre-market so you guys can see, get a better sense. Well, actually, I'm gonna leave it open, so you guys can kind of see it better. So once KR opened, again, this is the resistance level here, 27.22. Again, this is the intraday chart, meaning from I'm looking at from 6:30 a.m. pre-market through 3 p.m. when the market closes. Now again, I'm looking at this resistance level, 22.77. Why 22.77? Because this was the high of the day on this gap down, right here. So that's the next resistance level. You guys can see when it gapped out, literally gapped straight to this resistance level. And when I say resistance, meaning that when there's levels of resistance, price tends to kind of fight or it tries to break it. And then the price action tells you whether it's going to break it and continue to go or break down and fade off. So it's very, very important to understand that. So let's look at that level. So 22.77, when the KR reported earnings, stock gapped up, or it ran in the morning during pre-market, and literally when the market opened, you can see the shade. When the light gray is pre-market, the darker black is once the market opens. So you guys could differentiate. So when the market opened, you saw a lot of decision candles right here. This is what it almost looks like a doji. So a lot of wicks, a lot of dojis, wicks type of candles, meaning this is literally a struggle between bulls and bears. Literally, people who are buying the stock, they want it to go up, literally fighting with people who are selling it who want it to go down. So you can see the price action is very choppy. You can't really tell where this stock is going to move. So you have to kind of look at what I call higher highs and lower highs, or lower lows or lower highs, to kind of see where this stock is going to go. So you guys can see, when it started open, it started creating lower lows. So you guys can see it couldn't break off this Y. Now you saw this little spike, there's a little short squeeze, but it couldn't break high of day, which was around 27.70. And it literally shot back down, straight down by bears, by short sellers. But again, it was quickly bounced back by buyers. But look at this. It also created lower highs. So you guys can see lower highs, lower high, or higher low, higher low right here, and higher low. So literally right here, it's hard to tell where this stock is going to go. What you need to see is once this range breaks, once this higher highs or lower highs and higher lows breaks, or this higher highs breaks over. So pretty much that's the reason why I create these lines or these wedges, because it helps me determine what levels are breaking. Are we getting higher highs or are we getting lower lows? So that's how you determine where the stock is going to go. And again, it's never 100% accurate. That's why day traders are not trading 100%. The best traders trade around 70% of the time, meaning that every trade that they make, they're correct about 70% of the time, and they use that to their advantage to make money on that. Their winners, their average winners are always bigger than their average losers, and that's how they're able to be profitable in trading. All right, so that's the reason why I created these lines. Actually, let me take them off so you guys can see it again, because it's very hard to see. It takes time to kind of understand and see this in your eyes, because, again, one thing that I mentioned on the last webinar, you have to learn how to read price action. It doesn't happen right away. It takes time to understand how to read price action. It takes time to learn how to read the tape. Even level 2, which actually that's more advanced. Level 2 that I have to kind of cover, and also the tape, which is literally every single price and the quantity that's been sold at the market. So that's a more advanced level. So I'm just covering the basics. So Again, when I saw the price creating lower highs and then right here created lower lows, I decided to make a short position. So I decided to short this stock. So if you guys can see this, and again, create this triangular base, and right here created this triangular base. And when I actually enter when it actually broke down to this low right here. This low was 27.04. So when I saw that break, I literally went in. So I actually went in on this candle, which was around 9:30 a.m. Central Time. So one of the thing about day traders, especially if you're waiting for mid-morning trade, you have to be patient. You have to be patient to let the price action tell you where the stock is going to go before you trade it. Because if you actually anticipate it, it's okay to anticipate things if you see it already, but sometimes if you are too early, you might be wrong. So the best traders are really good at being patient before they make a trade decision. So think about it. The market opened at 8:30, and I didn't actually make my trade until 9:30. So literally, I had to wait an hour, after the market opened to make my first trade on this stock. So I literally had to wait an hour and look at the price action to tell me where the stock was going before I made my decision. So think about that, guys. It's not something that a lot of people could do. Be patient and wait that long to make a decision. But that's another skill that you have to learn as a day trader is patience. To wait for the right time, to be like a sniper. Like a hunter. When you're hunting, you have to be patient. You have to wait for the right opportunity to strike. So that's one thing that I wanted to make clear and mention that. So I did win in around 27.05, 27.04 short on this candle when I saw lower lows. When I saw this wedge break, literally right here break, meaning that we're going to get more price down. And I was correct. Price action does not lie. It tells you the truth of where the chart's going to go. Now, I did put my risk above that around 27.22. So I literally risked maybe, let's see, 2012. I just put it 25 cents to make around 50 cents, which is 2 to 1. So if I'm risking 25 cents, I need to make 50 cents on this trade to make a 2 to 1 reward to risk ratio. So I'm risking 1 to make 2. I'm risking 25 cents to make 20 cents. So let's say that I got in around 27.05. So minus 50 cents, looking at 26.55. So 26.55, which is right here. And I'm going to make a little alert on it. Okay. There you go. Boom. So I entered here at 26.05. I'm risking 25 cents. So meaning if the price at 27.05 decides to not trend down and go up, I'm gonna get stopped out at after let's see. Around 23.70, 27.30. So around right here. So if the price decides to reverse on me and go up, I'll be getting out at 27.30 and I'll be losing 25 cents. But if it continues to go down, I'm gonna close it around 26.55, and that's pretty much what I did. Actually, I got better. I got around 26.37, so I did a little bit better than that. So I hope that makes sense, guys. And when I say I'm risking 25 cents to make 50 cents, I'm not literally saying that I'm just putting 25 cents on the table and trying to make 50 cents. No. By that means I'm risking 25 cents on the chart to make 50 cents on the chart. And from there, I can risk anything. Let's say that I want to risk $100, let's just say I want to risk $100 to make $200 just in this trade. So if I want to risk $100 to make $200, all I have to do is divide $100 divided by 25 cents, that means I have to literally short sell 400 shares at 27.55 and wait for the price to hit 26.55 to cover my shares, and I'll make $200 right there. And that literally would have been in, let's say, 15 minutes right there. So 15 minutes, I would have made those $200. Now, keep in mind, there's so much liquidity here. Again, 732,000 shares were traded actually in this candle, 9:30. So I could have shorted a lot more than 400 shares if I wanted. And this is when you could. This is where the professionals really come in. That's the reason why they love to trade liquidities, because it could go big. Let's say that I wanted to risk $1,000 to make $2,000, which again, there's enough liquidity to do that. So again, very simple. $1,000 divided by 25 cents. All I need to do is buy 4,000, short sell 4,000 shares at 27.05 and cover 4,000 shares at 26.55. When I say cover, I mean buy them. Buy them to cover. And then I would have made $1,000. $2,000. So I'm risking $1,000 to make $2,000. I would have made $2,000 in 15 minutes, just like that. I know it sounds crazy, guys. I know for some of you, you're like, wow, that's crazy. But yes, you can actually even make more than $1,000. There's enough liquidity here to get in and out and probably risk $5,000, $10,000 actually. Again, as a reminder, 732,000 shares was traded in this 3-minute candle. Let's say if I'm a big player and I wanted to raise $5,000, that means I had a, 5,000 divided by 25 cents, I had to short sell 20,000 shares. So short sell 20,000 shares at 27.05. I had to cover 20,000 shares at 26.55. And again, 732,000 shares were traded in this 3-minute candle. So yes, there's enough liquidity to short sell 20,000 shares. So I hope that makes sense to you guys. I hope that makes sense. Now, this is a mid-morning trade. This is something that you have to be patient, because it takes time for this price to develop. It doesn't happen right away. Like sometimes what ends up happening, people might be too early. Let's say that this guy was too early. Wanted to anticipate this is gonna literally just fade down or start selling down. And let's say that he shorted around 8:45 at around 27.16, and then you see this huge candle, but then it picked up by the bulls, and then the guy squeezed out right here. And that's the reason why you get candles like this. You guys can see that you get candles like this when short sellers get squeezed and buyers get sold on. So this is something also buyers, selling off because it didn't go their way. So that's the reason why patience is the name of the game when it comes down to day trading and being precise. It's all about the entry. It's all about price recognition. It's all about being quick to enter, because when you get the signal, it's time to enter, that the price is showing you, the price action is telling you, is giving you lower highs, you need to short, you got to get in right away. Because if you get in right away, other traders are going to recognize it before you, and they're going to get in, they're going to get the shares. And that happens all the time, and I've gotten better over the last couple months in terms of my entry, because sometimes it used to take me longer to recognize the entry, and I used to chase a little bit, but now I've definitely gotten a lot better, and I'm very quick at it to really see it and recognize it right away and get in like that, which again, it's a skill that takes time to develop. So I just wanted to mention that. The next thing that I want to cover is actually an opening trade, and that's takes even more recognition in terms of understanding price action and also being very, very quick. So again, this trade KR, it took me literally took me an hour before I made my trade. So a lot of it was just patient, look at the price action, seeing what it was telling me before I made my decision to get in, which again gave me an hour to make a decision if I wanted to get in short or long, which is very nice. But when the time came in, I was right there to get in. So I literally had to pay attention to the chart and before I made my decision and look at it for literally an hour to really see what was going on. I know it sounds crazy, but again, that's where patience really comes in. And you have to be patient to get in at the right moment to make sure that you get the best reward to risk and then you're able to profit. All right, so the next trade that I want to show you guys is actually Square, which I'm sure you guys are very familiar with the company. They're the ones that actually have the iPhones. They're the company that you could, if you have, let's say you're selling like hot dogs in the streets, and you could, plug in that Square on your phone, and then you could swipe your card, and then you can get paid versus carrying like this whole machine that's connected to all these other machines to swipe a card, to take credit card or debit card. So that's what Square does. So let's look at Square and the type of trade that I made in this and how I made money in this trade. So there's various. This type of trade I also short sold on this day. I only got a little bit out of this move. That was my mistake on this huge move. This was actually a $7 move. Huge range, and this is exactly what traders look for. Big range, big volume. 76 million shares were traded in this day, so again, a lot of volume and a huge range, $7 range to kind of really make some money on this. But I didn't really make that much money because I kind of, shorted it, but I covered too early, so it was kind of like a scalp, and I missed out. But on the next day, it created another opportunity for a bounce. And this is what I call the gap down reversal type of trade. So, actually, give me 1 second, guys. All right. This is a gap down reversal type of trade. So this is what happened. On this day, November 27, it's a huge sell-off in Square, and it was actually because of a downgrade. So one of the investment banks downgraded Square, telling their investors, you know what, it's time to sell, take your profits. The Square move has been overdone because in the last year, if you guys could see, I believe is up 200%. So if you guys can see this huge move, literally from 14 to 49 is over 200%. So for a lot of investment banks, who have their clients invested in Square, this investment bank downgraded the stock and told investors, you know what, it's time to take your profits. This move is overdone. It's above its price multiples in terms of valuation. So a lot of people sold it or shorted it at that day. So there was this huge down move. So this huge down move, not only did it create an opportunity to short sell on this day, but it also created an opportunity to buy a bounce, huge bounce the next day. And this is actually exactly what I'm looking for. So what I was looking for was for a gap down and a reversal. And it was more of an opening trade. So let me show you guys what I mean by that. All right, so let's check it out. Here it is. Now, when I trade the morning, the most important thing that I look at, I look at, of course, price action, and I look at the 1 minute chart because literally you have seconds to make a decision like this. I compare trading the open to being a professional athlete, like being a basketball player, a soccer player, baseball player, where you have to make quick decisions, literally split-second decisions like this to whether to decide to short it or buy the stock at that particular moment, and know how many shares or how big you're going to go. Because that's another part of it. You have to know how big you're going to go. You have to know how much you're risking in case the stock moves against you. And you have to get out quick as well if it doesn't go your way, because if it doesn't, you could end up losing more than you want to risk. So that's another thing. So again, trading the open is like being a professional athlete. It takes time. It's just a skill that you have to develop over time to get better at it. You have to make quick decisions too, very, very quick decisions because those decisions could be the difference between being profitable or losing, literally seconds, or even milliseconds to make those decisions. So I hope that kind of makes sense. So again, on the 1127 downgrade, huge short opportunity, literally it faded all day. So what I was looking for was a gap down reversal, and as you guys can see, the pre-market is there was more selling, more sell off, and literally gap down all the way. So you guys can see, and this is the close, the prior day close, prior closing day, and a gap down below that level. So as you guys can see, gap down and then the price reversed. So I actually bought this stock. So literally at the second minute of the market open, I was bullish on the stock. Now the first candle, there was a huge sell-off. You can see red candle. So I didn't really know what was going to happen. Now what I was looking for a bullish signal, big green candle to tell me that this thing was going to reverse and it was going to move forward. So that's exactly what happened. As you can see on literally the second minute on 8:31 a.m., we got this huge green candle above the VWAP, and it broke out of the 1 minute candle high, and it literally just started trending. This is what I call the gap down reversal washout red to green move. So it literally gap down, made its move at the second minute of the market open. I bought right here around 40. Literally, I bought around 39.95, and I just let it ride, and it went green. So it was red, and it went red to green, meaning that before this line, it's actually red, meaning it's down on the day. But once it crosses this line, it's up on the day versus the prior day. So red to green move right here, which this is a day trade. This is an opening trade, which literally you have to make split-second decisions because that's how you're going to get the best reward to risk ratio on your trade versus chasing. If I would have waited 3 more minutes, I probably wouldn't be able to get into like 834, 835, and I would have gotten in at 40.60. I'm literally right here risking, 465, and then the low day is 39.50. So 40.65 minus 39.50, I'm risking literally $1.15, $1.15 to maybe make $1.15 or less. So that turns out to be more like a 1-to-1 trade. But if you get in before the move, you get in a 2-to-1, 3-to-1, even 4-to-1 trade opportunity, and that's what makes you profitable. You always, minimum is 2-to-1. For every dollar you're risking, you want to make at least 2. But the best traders out there, they're making 3-to-1, 4-to-1, even 5-to-1 on the trades, and that's how they make those huge wins. And that's those huge wins cover the little small losses, and they have huge profitable trades and huge profitable months on the trades. All right, guys, so that's pretty much it. I just wanted to show you guys that it's a lot. It's a lot to digest. For some of you guys, probably a lot of this didn't make sense. Again, this is a skill that takes time. It doesn't happen overnight. It takes months of dedication, hard work, reading charts, understanding it, and learning how to read the charts and learning how to read price action. And also you have to understand the setups that give you an edge, which an edge gives you a high probability of success. That's when traders say you have to look for an edge. What is your edge? You have to look for setups that give you high probability of success. And next to this setup, it's like an 80% probability. So I love this setup. It's one of my favorite setups to kind of go long at the open. So I love this setup. So I hope you guys learned something, guys. Again, I'm going to put this video. I know a lot of you guys weren't able to make it today. That's okay. Don't worry about it. I know I originally said the webinar was going to be 8:30 p.m. Central. I did have to change it last minute, so I do apologize for that, guys. But again, I'm going to post the YouTube video on the Facebook, so definitely watch the YouTube video. I also recommend you guys to follow me and click on alerts on YouTube, my YouTube channel, because I'm going to be posting a lot of more awesome trades that hopefully you guys can learn a lot from. All right, guys. Hope you guys have a good one. Take care, guys. Bye.